Well, that brings us to our next session, which is the Garage session by Anurag Sinha, co-founder and CEO, OneCard. And may I please call Mr. Anurag Sinha on stage? Please give him a warm welcome. Let's give him a big round of applause, ladies and gentlemen. Thank you.
It's very difficult to hold a session after the cool launch by UIDI. But we'll try to do the justice to our session. Cool. So it's a garage session, as everybody knows. We're gonna keep it short. I'm gonna speak for a couple of minutes, and then people can ask questions, and we can have conversation. Because I don't have any presentation or something to make. The idea is to just make it more interactive and more personal. So a bit about background about myself. I started my career at a bank called ICICI in 2003, worked there for 13 years, mostly worked in payments area. Now, of course, today we see a massive payment conference here where so many people are there, but back then it was much a smaller play. Few banks and few tech companies used to innovate in that. From there on, today we talk about a massive fintech sector. As you know, payments was the first area where fintechs came in. So I was fortunate to be watching the growth of products like Paytm, MobiKwik by the side. And that got me excited that, okay, we can build an app and acquire millions of customers. So 2016, I started my first company called Walnut, which was a personal finance mobile app. We scaled up to around 10 million users, built out a bunch of use cases. And we got acquired in 2018. And 2019, and when I started the current company, OneCard, very simple insight. I think UPI has done massive adoption in India. They've made Indians comfortable using money on mobile. We saw credit would be the next problem to solve, and that's why we built the entire company around credit. And it just so happened today, in fact, there is a big product launch scheduled by NPCI on UPI on credit line, which is probably expected to revolutionize the credit market. Now, while we talk about payments, we have around half a billion people using payments digitally, thanks to UPI, cards, and many other things. But not many people don't know that half a billion people have actually taken credit too in India. That is what the bureau records say. However, when you look at individual product categories, the penetration is still quite low. If you talk about products like credit cards, which is a payment credit product, less than 40 million people have actually credit card. If you talk about home loans, less than 20 million people have mortgages. So I think what we are trying to say, while overall basis, there is a large number of customers who have access credit, there's still a lot of people have to access credit on a continuous basis. And this is very important because we're a growing economy. If the economy grows, credit has to be there because credit is what finance or rather lubricates the growth of economy. So that's what we are aiming for. We work with banks, build out the entire mobile-based customer experience because we believe that the branch-based credit processes are getting automated by the banks themselves. There is very little what we can do as a tech company. So we decided to pick the direct-to-customer approach. End-to-end customer experience is managed through a mobile app. Build technologies like fraud scoring, credit scoring. How do you, score a transaction and things like that. So that's about my journey. So I've been a banker for 13 years, been an entrepreneur for 8 years. That's my journey. And happy to open up for questions. Given the place where we are in, this is the probably best place to start and build on this. That would be my ending comment, and happy to answer any questions around that.
Any questions?
Yeah.
Questions?
Hi, Akshay from Spring Money. What I understand about OneCard is that it's a experience part of the consumer side, and correct me if I'm wrong. I'm not sure if you play part in underwriting the credit as well, and
Yeah, go ahead.
and if not, how OneCard as a company will go for the people who are not part of the formal ecosystem?
Good point. So, as per the regulations, the underwriting has to be done by the bank because the asset belongs to the balance sheet. But we have built technology systems to help bank underwrite digitally. So there's no physical file movement happens in our system. But I think what the question you're asking that if we are following traditional credit models, are we not only solving for people who are already being underwritten by the banks, or are we working on to expand the market? So I think probably right now your answer is right because we work with banks and hence our risk appetite as a company is more linked to what banks are comfortable, which is typically I would say bureau scored customers. But I just wanted to like highlight that out of a 1.4 billion population, around 800 million adults, there are bureau records for almost half a billion people. This is a very large segment to go. So yes, new to credit is a very small segment of our customers because of our relationship with the bank. But what we are very excited about is the account aggregator ecosystem. We believe that account aggregator ecosystem, and we are already working with one of the PSU banks to actually, we've just made it live on our platform. This will allow us to get access to information which was never there, or it was there in physical form like bank statements. We are sitting in Perfia's stall. They build a product around that. The only problem is those products have not made sense for small line credit like credit cards like 70,000, 80,000. Typically, they will make more sense for a 300,000 rupees personal loan and things like that. Account aggregator will allow us to actually use the data at a much cheaper cost in a faster environment and underwrite the customer digitally without actually accessing information on the bureau too. So strongly believe that the new to credit population will get solved through that. But I think one trend which we have seen in last 5 years, typically credit journeys for Indians used to start at the age of around 26, 27. That has gone down to 21, 22 because people are earning incomes earlier and they're also borrowing earlier. Also, we have many more products like BNPL, short-term EMI. Education loan itself has become very large category in domestic market. So that has created a very large footprint of bureau. Almost 15 to 20 million people are joining formal credit bandwagon every year. This is a very large number to go after. So that's why. But you're right. Right now, if you ask us, our focus is largely to solve underserved category, if I may call, because that's what our bank partners are. We were. As of now, credit cards can only be done by banks, so we are governed by their risk appetite. Yeah. And that's why we are very excited about the UPI line of credit product, because today Reserve Bank does not allow NBFCs to participate in this ecosystem, but there is a chance in future they will open up, because almost 50% of the unsecured credit, especially in the segment you are talking about, is actually underwritten by NBFCs, not by banks. And unless NBFCs are allowed to issue cards or issue credit lines over UPI, this system right now is not covered by this. Yeah.
But I would like to ask a question to you, sir. You said you were a banker, and then the whole aspect of becoming an entrepreneur. What was that thought process behind? Like, was that a
So, very simple. I was at the bank, very large bank. We used to acquire 300,000 customers using 6,000 branches. And we see an app which can acquire 300,000 customers just like that. So I think that was my turning point. See, banks have been building technology forever because the entire banking runs on tech. However, what we saw, the front-end tech, which was not there before 2014-15, has taken shape a lot. And this is a very iterative tech. You can't write a BRD for that very tightly because by the time you write, you implement, things have changed. But the other angle is Indians are very, very diverse. One product doesn't work across. It doesn't work within the same city. So you got to personalize. So that was our motivation. So I say that I was a banker. I've seen companies like Paytm, MobiKwik get built in front of our eyes. We were like a nodal banker to them. And we decided to jump the ship and be on the other side. So that was my trigger.
Any questions?
Could you talk a little more about credit on UPI and how you are planning to leverage it, if at all?
So credit on UPI. So first of all, UPI is like an infrastructure layer. So, everybody has to ride on that adoption curve. Even today, if you look at the credit card markets, almost 60% of the repayments come back from UPI. So consumers are already using UPI who are using credit cards. So credit on UPI is a very large acceptance play first because the number of merchants accepting UPI is more than 50 million compared to card. So you just access to lots of new transactions. And credit card businesses, engagement is the most important North Star metric which everybody tracks. So if you are able to crack better engagement, the entire, I would say, portfolio becomes better. So that is because the original UPI on credit was planned on RuPay rails, and hence my answer like that. The second part is what yesterday got announced by RBI, which is about taking away from beyond cards to credit line 2. I think that can open many more new use cases. Now, if you look at the credit business, there are three broad costs: cost of risk, cost of funds, cost of operations. Now, cost of risk and cost of funds are not changing for any of these products. But cost of operations can dramatically go down, and that can allow lenders to go down the ticket size. I think the bigger opportunity is around opening up the market for lower ticket size. Having said that, what I mentioned in my previous question, majority of the underwriting in those segments are done by NBFCs, not by banks, because banks have access to a better quality customer base thanks to their CASA franchise. Hence, but as of now, Reserve Bank has restricted this to banks only. Hopefully, in future they will open up for. So I think the true potential of this will happen when the non-banks are allowed to enter in this space, because the platform of UPI is super wide. It's not restricted to any city or segments. Like you have lower value customers, higher value customers. You have rural, semi-urban, urban. Everyone is using UPI. So the benefit of that platform should be extendable to everyone. So let's see. It's baby steps, one step at a time. Yeah.
Hi, Anurag.
Hi.
So I had a question. Obviously, you being a tech company, you're a front-facing organization for, say, a bank. You're acquiring customers on their behalf. But I'm sure that's not your end of game for you. Right? So obviously, data is oil for you. That's very important. What is, I mean, is credit card going to be the end game, or is there something else we can expect from you?
So you asked three questions. One, like in credit businesses, balance sheet is extremely important. And, like in India, if you study the debt side capital markets, it's mostly not there. So most of the debt capital in India is with banks. So if one has to do the lending business, it has to partner with the bank. It's no brainer. So from us, from very early on, we have partnered with them so that we can access large scale of balance sheet support from banks. So number one. In terms of product expansion, our belief is consumption credit is what we want to solve for. So we started with credit card. We've just recently launched personal loans. And eventually, we will stick to these areas. Now, when it comes to data, I think more in an entire conference, almost 30% sessions are around data. And rightly so, because we believe that data will allow us to leapfrog many markets. Thankfully, the PDP bill is come now. Now, regulators are still yet to define things, at the customer end. As far as the data storage, usage, security, there are very well-crafted guidelines already in place by regulators, especially RBI. So we have to follow that. But I think the evolving thing we are expecting is that how at the customer end, how the consent framework and all that can be done. The good news is, if you study the PDP bill, it has taken a lot of inspiration from the account aggregator framework, which already has inbuilt consent and then repudiation of the consent, what can you use it for, and if the customer has told that you have to delete the data, blah, blah, blah. So all of that, we are hoping that will become much clearer. So we are all hoping for that, because for most of the fintechs and even for banks, data is the oil. The entire banking runs on that. So it's high time we define it for the customer level. Yeah, for sure. Yeah.
Yeah, hi. When UPI came, obviously the payments market exploded, but wallets did suffer. Similarly, when you have credit on UPI, do you think a similar thing can play out even for credit cards?
Could happen. So, if you open up the credit card stack, one is, of course, there's a form factor called plastic. But other than that, it's a four-party network. There is an issuer, there is an acquirer, there is a merchant, there is a cardholder. I don't think that equation is changing. Okay. But yes, form factor will evolve. Probably plastic will not be relevant in future. If you look at today, if you look at that, almost 60% of the transaction you do it online. So there's absolutely no plastic involved. Now with tap and pay coming in, there is also a place where you will actually tap your phone or you tap your card. So the original use case of dipping the card or swiping the card is actually becoming less and less because India has leapfrogged many of this. Having said that, credit is a much more granular business case, unlike payments. Like if you look at the UPI market, there is very little market share beyond the top 3 apps because that is how payment business operates. But credit is a lumpy business. It's a balance sheet driven. It is not easy to someone to control very large market share because you got to underwrite, you have to collect. All of that is also equally involved in this. While payment, so it's a two-sided product. While it's a payment product, it's also a credit product. And hence, I'm like, if you look at banks like HDFC or Bajaj Finance, I'm just quoting the names because they're big names in unsecured credit. The overall market share is not very high as like, credit card is a different case because many banks don't do the business. But if you look at the personal loan business, which is a close replica of unsecured lending, the market shares are very fragmented. So we believe there is a role for everyone to play. Now, form factor will of course evolve for sure. I mean, look at this. In our case, video KYC is making onboarding digital. A lot of customer selection is happening on the phone or on the web. Then your usage is already happening. Like people don't want to call centers anymore. They want to access everything on the app, or they want to make sure that you can control the card. So all of that use cases are already getting built. Now, will it become completely digital? The problem is that India is quite large and pyramidal. As this segment goes up, there is a new segment which comes from the bottom to the next segment. So it's going to take a long while, in my opinion. So two things. So evolution will happen, but I don't think plastic is going away for next 10 years, for sure.
Yeah, another question is on MDRs. So that has been a constant debate, and across the world, we have seen many countries actually trying to reduce MDR. Is this a signal by the regulator where they are doing credit on UPI? That MDR is something which they don't like, and maybe that has been the ugly head why the adoption has not gone up of cards.
So I think MDR is a very hot debate in India, like any markets. It's there in developed markets also. But if you look at UPI and credit, and UPI has no MDR as we know, but UPI and credit they did allow an MDR up to a certain level, of course, because below 2,000 rupee transactions and below 20 lakh merchants, there's no MDR. The yesterday guideline which came in did not mention about MDR, so we're yet to see the final guidelines to come in from NPCI to see whether there's an MDR there or not and what is the thought process. But what I'm trying to say that if you look at that overall UPI, there's no MDR, but UPI and credit, there's an MDR. So there is an appreciation by the ecosystem, including regulator, because regulator is not the only entities, merchants who actually have to pay. There is an appreciation that there is a cost of fund involved, which the bank has to incur. And at the same time, there is also the entire reward structure around credit, because there has to be an incentive for customers to migrate their transactions from, let's say, cash to credit. So that cost is deeply recognized. So I think we are hoping that MDR will continue. That is how has been the direction. Now, another point to note is, MDRs in India are quite competitive, by the way. So credit card MDRs would be in the range of close to, I would say, 1.5, 1.6%. Given the cost of fund structure in India, the Indian cost of funds are in the range of 7.5%. Barring few banks which will be below 7, most of the banks would be 7.5, 8% because also short-term money. And hence, the cost of fund is quite large in India compared to lots of other markets where we see, if you look at developed markets, the MDRs would be in the range of 1.5%, the cost of fund would be 3%. So, like, very large gap for that. So, there is an appreciation that MDRs need to continue in credit card. And this deliberation has happened many times, and we have seen MDRs of debit cards being slashed. MDR in UPI doesn't exist. Still, MDR on credit cards have existed so far. So the expectation is that this will continue. Yeah, that's...
Thank you.
Hey Anurag, hi. I'm Viral from Epify. What I'm seeing around me is that a lot of fintechs are looking, in the cards business especially, are looking to launch secured credit cards. OneCard has done it a while back, and what I'm wondering, and like you said, for unsecured, the risk appetite is ultimately governed by the bank, and I think that's why secured is an attempt to sort of expand that market. My question is, what's the sort of profile that you see there, and do you actually see that playing out in terms of these customers ultimately graduating to higher ticket
Yeah.
size, unsecured, access to credit?
So yes, so I think secured credit card has recently caught fancy, though the product has been around for many years. But the reality is that nobody sold this product because when you sell the card, you don't know whether you will get rejected or not. So that's why the process. In digital process, you can actually weave in well. So one thing's for sure, everybody wants to eventually upgrade to unsecured. That's the insight number one. Insight number two is, so customer do want a graduating process. And second thing is customer do actually miss payments even unsecured. So a lot of people believe that there shouldn't be any collection effort required, but that's not the case because the objective is not to liquidate FD. The objective is to help customers repay. And especially in a product like credit cards where there are disputes involved, it's very common for a customer to miss his payments and then come back in the normal scenario. So anybody who's launching has to build around that. Number two. Number three, you spoke about segments. So clearly there are three segments which we see. One, new to credit segment, especially as I mentioned, a lot of Indians are now starting their jobs much earlier. Like in the bank, we used to we will not underwrite a customer below 25, but that's not the case anymore. People have started earning salaries at the age of 19, 20. They're borrowing at 21. So, and the banks, the unsecured credit risk is not yet there. So that's one segment for sure. This is the prime segment. You can call it a youth or early salary segments. The second is, of course, customers have gone bad. Almost 33% of the bureau profile customers have missed bad history. Now, this is the best way to get back to the credit bandwagon because this will allow them to build a credit history. That's the second segment. And third segment is also we are seeing because the e-commerce penetration is growing so much beyond top 200 cities, and usually banks don't have very large credit card operation in those markets. We also have to remember that credit card business is dominated by 4 banks, by the way. 4 banks control almost 80% market share. So many banks don't do this business, and hence the penetration is low. So these are the 3 segments. But the insight is common that people want eventually an unsecured card. So that has a very strong, association with that because somehow they believe that a card has to be unsecured. That's how the normal insight for customers. Awesome. On that note, we'll end. We have a product launch. We're actually launching RuPay on UPI today. It's in next 2 minutes in NPCI Pavilion. If anybody wants to join, please join us there. Okay. Thank you.